Hello, my name is Dorothy Nyers, and this is my presentation for the Research Methods module. The research topic I have chosen is Earnings Management in Times of Economic Crisis, a study of the COVID pandemic in the United Kingdom. I was interested in this area of research as I covered this topic of earnings management in my contemporary issues module, where I did a high-level review of the subject. Hence, I wished to carry out further research into this area with a narrowed down focus. So this presentation has been influenced by my initial paper, especially in the literature review section, and so my initial paper submission is included in the list of references at the end of this presentation. Earnings management is the deliberate manipulation of financial statements and reports to achieve certain objectives. The purpose is to influence perceptions of a company's financial performance or stability. The COVID pandemic caused never before seen disruptions to global economies, including the United Kingdom. These included a decline in GDP and reduced spending and economic activity due to the lockdowns. Some industries were also hit harder than others, especially industries that required social contact, such as the hospitality and entertainment industries. The government provided support in the form of furlough job retention schemes, tax holidays, and loans to many of the harder hit companies during the pandemic. The aim of my proposed research topic is to examine earnings management during an economic crisis with a special focus on the recent COVID pandemic. My research objectives are to examine the extent to which UK companies engaged in earnings management during COVID, to examine whether certain industries were more likely to carry out earnings management during COVID, to examine differences in earnings management levels between essential versus discretionary goods and services sectors, and finally to examine whether government support such as the job retention schemes given to companies in distress influenced their earnings management levels. Earnings management is an important and relevant topic because the manipulation of financial reports can have very serious consequences. An example of this would be the financial scandals that happened in the past 2 decades, such as Enron, WorldCom, Freddie Mac, and AIG scandals. All of these contributed to the stock market crashes in the United States. If research is carried out on earnings management during the recent COVID pandemic, it can contribute in many ways. First, it can help provide recommendations to regulators on how to strengthen monitoring systems and reduce earnings management practices during crisis periods. It can also provide guidance to investors and auditors on how to identify red flags of earnings management during crisis periods. And finally, the research can give ideas and suggestions for future research to academics. For example, research relating to post-pandemic recovery, as well as the long-term impacts of earnings management. I will now move into the literature review. Healy and Whelan in 1999 stated that earnings management occurs when managers use their judgment to intentionally alter financial reports, to mislead stakeholders about the company's financial performance, or to influence contractual outcomes. Many researchers in the past have identified different methods of earnings management, including accruals-based, real activity-based earnings management, income smoothing, and other techniques. Accruals management is described as reallocating profits between different accounting periods, but still in line with accounting principles. Real earnings management is where profits and cash flows are influenced through real financial activities and transactions in each period. Many models have been developed over the years to measure earnings management, as shown in this table below. Some of the most widely used models to measure accruals earnings management include the Healy, D'Angelo, Jones, Modified Jones, Healy and Whelan models, which were all from the 1980s and 1990s. And some real earnings-based models were developed by Graham, Roy Chowdhury, Cohen and Zarowin, and Zhang. And these are more recent models from the 2000s. There are many theories that can be linked to earnings management. For example, the agency theory talks about the conflicts of interest between the managers, who are the agents, versus the shareholders, who are the principals. The stakeholder theory shows that the various stakeholders of the firm can have different interests. The signaling theory states that managers carry out earnings management to signal strong future performance to investors. The positive accounting theory provides three reasons for managers to carry out earnings management. One is to obtain higher bonuses, second is to meet debt covenants, and the third is to reduce political costs. A lot of research has been carried out over the past years on the various reasons or motives why managers carry out earnings management. So as shown in this table below, some of these reasons include to exceed targets and increase compensation, to inflate firm value, to attract investors, to avoid reporting a loss, and to reassure investors during financial crisis. A lot of research has also been carried out to show that corporate governance helps to reduce earnings management. As shown in this first table, some examples of corporate governance, including board characteristics and audit committee characteristics, have been shown to reduce earnings management. There have been some recent studies on earnings management during COVID in different countries and regions such as the United States and Europe, as seen in this second table. But there is still further scope of research into earnings management during COVID, especially in the United Kingdom. So that is why I have selected my topic for research. I will now discuss my planned methodology for my research. I will be conducting secondary quantitative research. My sample will be a selection of publicly listed companies on the London Stock Exchange. I will select companies from industries that were heavily impacted by the pandemic, such as hospitality, entertainment, and aviation companies. I will also select companies from essential sectors as well as companies from discretionary sectors so that I can do a comparison. I will also finally select companies that were in financial distress and were given support by the government in the form of furlough, that is the job retention schemes. I will obtain the financial statements of these companies from the company websites and also from Refinitiv. I will also collect macroeconomic data such as GDP during the pandemic from the UK Office for National Statistics, that is to understand how COVID impacted the economic in the UK during the pandemic. For all of these, I will obtain the data from 2018 to 2024 so that I can measure and compare earnings management from the pre-pandemic, during pandemic, and post-pandemic periods. I will measure accrual-based earnings management using the modified Jones model, and I will measure real earnings management using the Roy Chowdhury model. These will require calculations based on specific values in the financial statements, and it will also include statistical regression analysis. Since the timeline provided to complete the research is March to early June, this is around 13 weeks in total. I will write my introduction in week 1. During weeks 1 to 4, I will work on my literature review, that is researching the literature and doing the write-up. I will design and write the methodology in weeks 3 to 5. I will collect data during weeks 4 and 5. I will analyze the data and write up my analysis during weeks 6 to 10. I will write my conclusion and do final editing and fine tuning in weeks 11 and 12. And then finally in week 13, I will submit my research paper. Thank you.